live now. Let me get one last thing here. Just a moment. Okay. All right. You guys, this is not as smooth as I wish it was. This is not as smooth as I wish it was. Okay. It just wants me to do so much stuff on both that I can't release. Okay, and boom. All right, finally, we are live. You guys, I told you last week. I warned you. Told you last week this was gonna happen. So if you guys watched last week's episode about stock market open, the entire episode was earnings season. Something isn't adding up. We were watching a lot of the biggest banks. I think it was 6 banks or 7 banks. They'd all reported that their year over year, their last 12 months of revenue was down 50%, but all of them were green. We were talking about Tim Cook, the CEO of Apple. He was saying in their last quarterly call, he was dodging the question left and right about consumer demand. He wanted to just talk about supply and supply chain and all of that stuff, but he refused to answer questions on, well, what about like consumer demand? Do people still want your things? I forget the other stocks that we were covering during earnings season, but it kind of came to this in the last couple of days, or I guess about 7-8 days since we recorded last. Things have not gotten better, and things have gotten a little worse. And in fact, I put it right there in the title. You guys, if things are so good right now, and people have so much money and so much opportunity, and everything's just going so well, why are we debating over the definition of a recession? We shouldn't even be talking about recession, right? People should be laughing and having a great time, but we're not. Everybody's here debating, splitting hairs over what's the definition technically of a recession. Well, I don't know if you saw it, but as of this morning, and just a minute, let me hit one more thing here. I just realized I've got to hit one more deal. Sorry, everybody. Send. Yes, as of this morning. One more thing, you guys. I apologize. You know what happens when you're working with me. Send now. Boom, boom, boom. All right, send. Okay, apologize. Okay, so as of this morning, did you see the news is out? It's official. We are in. Let's see if it's. See if I can get this for you. We are in a recession. The numbers came out this morning. I don't even know if I can get this. Well, anyway, yeah. So we're officially in a recession. You guys, good morning. Ryan Dirks here. Make sure you guys remember live chat in the comments, YouTube, Facebook. We've got live chat going on. I'm gonna get that. I'm just gonna click over to that. There we go. Josh Riley, increase microphone volume. Thanks for that heads up, Josh. Tell me, all right, tell me if that helped at all in the comments. Maybe it did, maybe it didn't, but just let me know. Okay, now let's start off right from the top, you guys. As you guys tell me about the microphone volume, I know this will work just fine.
Why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth.
First off, this was just from earlier this week. There's one guy in the White House press corps who is actually asking tough questions about recession, and the lady here is denying left and right that there is a recession. Recession traditionally has been 2 consecutive quarters, so 6 months of contracting or shrinking economic activity, say GDP.
In a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Right.
So now this guy's typing into Google Harvard Business School recession defined. Right there, 2 quarters of negative GDP growth. So that's kind of the situation we're in right now. Okay, now I'm going to see if I can real quick figure out what's going on with the mic volume. Default microphone. Let me see here. How about that? Tell me if that sounds a little stronger. I turned that up, the microphone threshold volume. So that ought to work, Joshua. So thanks for the heads up in the comment section there. So you guys, this is kind of the situation we're in. Now let's see, before we get too far in, I've got a bunch of earnings season stocks to go over with you. Again, it's not much better than last week was. We've got about 20 minutes until the stock market opens. Let's see here.
Business.
Really?
It's always hard to predict how deep or how long these cycles will be.
Okay, so I have a lot of stuff planned. However, the CEO of Facebook is on CNBC right now, Mark Zuckerberg. If you missed it yesterday, Facebook, for the first time ever, missed their earnings. A big deal. No kidding, because in a recession, the first thing to go is your marketing budget, and Facebook thrives on ads. So I'm going to shut up. Let's hear Mark Zuckerberg for a minute.
It is growing faster and it has more progress than Stories did at this time. But I've got a great group of guys. I've got people who work from the Charitable Trust, and people on the Investing Club, and people who work on Mad Money. And I started this morning saying, look, I can find silver line. Let me give you some. And no. I mean, there was a moment where Sheryl Sandberg, who's the...
By the way, you should never trust Jim Cramer. Total.
Before you think that things aren't good, the Wild Alaskan Company, sustainable seafood delivery, had a 36% lift using reels. Okay, well, so did Bar San Miguel. This is not what we're looking for. What I do find is that Zuckerberg is very self-effacing. Now, I said this to Lisa, my wife, last night. I said, Mark's very self-effacing. And she goes, will you stop? Will you stop with the Mark? Stop with the Mark. Okay. And I think that what happened is that we're just not used to someone just saying, hey, business is weak, we're an advertising company. But the multiple was certainly indicating that it's not a growth company. I found the call.
Okay, so I'm just going to assume he is, because he's hung up. Unfortunately, we missed the Mark Zuckerberg interview. That could have been awesome. But let me...
Yes, and it's a delight to hear an executive.
Yeah, so I think we missed it. Okay, you guys, so anyway... Sean in the comments talking about redefining a recession. Well, Sean, I think you're right. We redefined what a free and fair election is. We redefined what a man and a woman are. We've redefined what, anything. What haven't you redefined? So it only makes sense naturally that we redefine what a recession is as well. So I want to show you this, guys. Don't forget this stuff right here. Yesterday, the Fed Reserve raised the interest rates, right? Okay, big deal, right? What's that even mean? Well, allegedly, they're also supposed to be shrinking their budget, the amount of assets, bonds, corporate stock, real estate. They basically own a little bit of everything, actually a lot of everything. This is the last 5 years of interest rates. This is the, of the Federal Reserve's balance sheets. This is the last, right here, 12 months of the Fed's balance sheet, of all the stocks and bonds and real estate and everything that they have. It's all just stuff out there. The same stuff you and I could be buying. They're doing this to keep the economy smooth. The problem is, they've been saying all year, hey, you should expect us to stop buying so much. You should expect us to start selling off our balance sheet. It's not natural. It's not healthy. Hey, just so you know, you guys, this is what happens in the stock market when the Fed starts unloading stuff. The stock market starts to drop, and it's dropped pretty strongly. And I think pretty much anyone who watches this kind of stuff closely, like professional economists and whatnot, will to some degree agree that this amount of assets right here on the Federal Reserve's balance sheet being sold off is going to cause even more stock market sell-off. So they were committing to that again yesterday. We'll see how that pans out, though. One more thing here to consider when it comes to yesterday's Fed Reserve raising interest rates. This is a fun little graph I like to look at. and this is the S&P 500 versus the federal funds rate. So you can see here in the last 12 months, every time they hike the price of the interest rate at the Fed, the stock market trends just a little lower. It gets a little bit of strength back, and they raise it and it drops again, and it gets a little bit of strength back and they raise it and drops it again. Yesterday there was a quote from one of the CNBC or CNN people out there who were saying that the interest rate is rising, causing credit cards to be more expensive, housing to be more expensive, auto loans to be more expensive, business loans to be more expensive, everything, in an attempt to slow down consumer spending. You guys, I don't know about you, but it sure doesn't feel like everybody's spending that much. It doesn't feel like everybody has a very optimistic feeling right now. 1 second here. Carolyn says nobody should watch the Idiot Box to find real news. Carolyn, I agree, but you know what? Where else am I going to hear an interview with Mark Zuckerberg, the CEO of Facebook? So, you just got to keep in mind that if you guys think that CNN or MSNBC or Fox News is fake news, which all of it is fake news, it's all scripted, that why would there be any difference with something like CNBC here? Jim Cramer, the meme with Jim Cramer is that he constantly tells you to buy a stock right at its peak and it goes down. So why wouldn't Wall Street own these people as well and get what they want out of them as well? So I'm right there with you on that. All right, we got 15 minutes till the opening bell, and we want to make sure we see how this stuff's performing. So let me get back here. Okay, you guys, I want to go over some opening, shoot, hang on 1 second. I'm clicking on the wrong pages here. All right, thanks for the shout out. A lot of people in the comments are talking about politics or, campaigning and whatnot. Yeah, election's coming up, but I'm not in that right now. That is, I've got too many other things going on in my life. It's just not going to work out this season. So, okay, wow, this, did you guys see this? Walmart, who last quarter, 3 months ago, when they reported their earnings, they had it wasn't even that bad. It was just saying, hey, look, we don't think the next 3 and 6 months is going to be very strong for us. And they were down 25%. Their stock price was down 25% the next day. So Walmart, trying to learn from last time, they don't even report earnings for another 3 weeks. And they released a press release a couple of days ago just saying, hey guys, we just want to let you know, just nobody freak out. Nobody panic. We're not going to do what you think we're going to do. No, but Walmart said, hey, just so you know, everybody, when we release our earnings soon, we're expecting them to not be great. Inflation is pretty bad. The consumer is not very strong. And Walmart was down 8%. And that was just on a press release just saying, hey, nobody panic. Now, I think if I'm not mistaken, let me go back here. Let's check out Walmart. If I'm not mistaken, I believe Walmart has slightly recovered. On the 5 day? Yeah, you can see that sharp drop. That was them announcing. So they have slightly recovered, but not entirely. You guys, that is not a sign of a good economy. That is not a sign of a strong economy. Now, hold on, because that is not even over with. This is just a little shout out to Mike. Mike in the comments on our last recording, he and I were talking about Spotify a lot. Spotify announced with damn near every tech company out there that they're doing massive layoffs. And because they had that announcement, Spotify's stock was down 15% again in one day. They were what did they announce? 10% of their I think it was 10% of their workforce at Spotify they were laying off, and they were down 15% in one day. However, on the revenue, they did beat revenue, all of those expectations, which is pretty good. They had subscriber growth, their earnings per share, the revenue. They actually did okay. However, whatever, we'll keep moving because I wanted to show you some really interesting information that built off of what were going on with Walmart. Danielle, thanks for the shout out. I know, hey, I need you as much as you need us. You guys got to get out there, get down in those trenches. You guys did a lot of great work in the past, but okay, let's see here. Now, here was the other stuff to keep in mind when it comes to your stocks in the stock market. So I just told you about Walmart, right? Walmart said, hey, everybody, just want to give you a heads up, things aren't great. Well, check this out. Here's some other earnings information that came out in the last couple of days as well. This guy here did a great job compiling them. All right, General Motors had an earnings miss. Primarily, the CEO says it's primarily because of semiconductor challenges, so microchips getting inside. Raytheon, the war machine, right? That's all they do is the war machine. Not all, but you know what I mean. They were an earnings beat. However, they were not very good on guidance, future guidance, because they said supply chain inflation and labor woes. Okay, 3M makes all sorts of paper products and office supplies and all that good stuff. Same exact thing. They're actually spinning off some of their stuff. Okay, Kimberly-Clark. Kimberly-Clark makes all sorts of paper products, stuff you'd see in the bathroom, stuff you'd see in kitchens, all sorts of various paper products, like paper towels, that kind of stuff, right? Toilet paper. Again, Kimberly-Clark has actually been a kind of a success story because they've just been raising prices all year. Oops, get those ads out of here. They've been raising prices all year. Let's see their year to date. So they're actually doing a lot better. In fact, let me pull it up on this one. You know, as much as I love Yahoo, Google has a much better layout for us to see this kind of stuff. So Kimberly-Clark is only down 7% in change this year, but they are saying the same thing. They've been raising prices due to inflation and labor woes. Logitech, a tech company, missed earnings. Okay, here's more. JP Morgan, they expect credit losses to remain low throughout the year because customers haven't yet drained cash balances that grew fatter during the pandemic. Big term picture, near term credit outlook. What was it, Citicorp yesterday or the day before also announced like a $10 billion miss on theirs. Chipotle, again, this is just another broad market stock here. Chipotle reports weakening demand from lower income consumers, but overall strong sales beat. They see more substitution from fancier restaurants to McDonald's and Chipotle. And in fact, the other one here was Visa. Let me show you Visa. Visa had a massive killer report earlier this week. If you guys remember, last week I said that we would be watching this one closely because we wanted to know what credit card consumers were doing, and Visa kind of fulfilled what we thought it might be, which is that people are using credit like crazy right now. People are putting a lot on credit card. If you remember, I talked about this briefly at the last episode. About 3 months ago at last quarterly earnings, a few very interesting pieces of information came out, and Peter Schiff, he had a really killer little thread on this, and he was describing how Target was saying, look, our grocery sales are very strong, and in fact they're up. However, our higher ticket items are more expensive, are more luxurious, our wants rather than the need items that we have are suffering, and we've got a lot extra. And then combine that with the credit card companies like Visa, MasterCard saying that consumer use of credit cards are way up, and Peter Schiff was pulling a lot of data that had a really strong argument showing that the Americans are just using a lot more credit card right now than they used to. In fact, probably it was fair to assume and draw from that data that they were using a lot of credit cards just to buy things like food and gasoline, which is a terrible thing to see. You shouldn't be using a credit card to buy food. You consume food immediately. You get no return on that credit. And it's not like you could be the good credit card user who is paying your credit card off each month, but it was, that some of the data and the argument he was making was that people did not have enough money at the end of the month to buy food, so they put it on a credit card and then pay that credit card off if they could with their next paycheck. And then who was it just the other day during earnings also that reported that the number of people who are way behind on payments is way up. Gosh, who was that? Oh, I should have had that one. There was a earnings report where one of the CEOs was reporting that the number of people who are tardy on payments was spiking, which again is not a good sign of a strong economy. But anyhow, let's see. All right, so let me see here. How many minutes do we have? All right, y'all. We got 6 minutes until the stock market open. Let's see how we're. Before I continue with that, let's check in on how is the crypto market doing. Crypto market actually slightly up right now. 7-day kind of flat to up, 24 hours up. Okay, crypto is actually up right now. Let's check also world markets. Let's see how the stock market around the globe is doing right now. Pretty flat around the entire globe. This is usually a pretty good way to tell if this morning will be good or bad. You can see a lot of Asia will be tanking. You'll see a lot of Europe will follow right behind them tanking, and then we will as well. So we should expect a pretty flat day today. Okay, let me get back to speaking of crypto. This is a fun one. I'm not going to get into the crypto thing right now just because I am, that's a whole episode on its own. I'm not so big on crypto at the moment. Let me see. U.S. futures are still up. Okay. So yeah, it ought to be a pretty flat day today. For those of you who are big crypto fans, though, you guys, Coinbase shares tumbled. This is from yesterday, okay? Yesterday, or 2 days ago. Coinbase shares tumble 21% after a report that it's facing an SEC probe. Oh my gosh. Let's see how is it doing right today. Coin. And you guys feel free to comment in the comment section on any stocks you'd like me to comment on or do a little research on. So yeah, Coinbase is down 17% this week on reports that here we go. That it's facing an SEC. Why would they be getting investigated, you ask? Well, that's a good question. If you haven't been following closely, turns out there's a lot of very immoral and unethical people working at Coinbase right now, and what they've been doing is insider trading on crypto coins that they are also selling. So, for example, they sell a coin that's not the most popular one. It's not Bitcoin. It's one of the smaller ones. It doesn't have as much activity or volume. The people that work at Coinbase, they can see when the trades are coming through. And so what they've been doing, or at least what they're accused of doing, and it's not just on one or two, it's like across the whole spectrum, they've been putting trades in before your trades come in. So they're playing you. And so we're about to get an investigation potentially. Let's see what this person has to say on it, just to clear.
Check out shares of Coinbase. It is ugly. The stock is tanking this morning, along with the price of Bitcoin, as the SEC reportedly investigates the company. Shares are down nearly 15%. The issue at hand, whether the cryptocurrencies that Coinbase lists should have been registered as securities. Kate Rooney joins us to break down the issue here. And Kate, there's a lot to break down. Coinbase, meanwhile, is defiant, just tweeting, laws from the 1930s could not predict crypto. They're referring to the Howey test, which Gensler has used to say that they are indeed securities.
Yeah, absolutely. It goes back to this Orange Grove test. People in the crypto industry have really pushed back on that being the way to determine if something's a security, though. Guys, a source just telling me that the SEC is indeed investigating Coinbase. This is in regards to listing cryptocurrencies that the commission says are unregistered securities. Bloomberg did report this news first, but I'm also told that this probe predated that insider trading case last week, which, for a little bit of context, that is where this issue got a lot of attention. The DOJ also looked into the case. They didn't mention anything about unregistered securities. The SEC, though, when they came out with their statement, said, by the way, guys, it's insider trading, but there's about 9 unregistered securities here. So that's where it really got a lot of attention.
So we'll see. Honestly, I don't think it's going to be that big a deal, you guys. The debate about is a crypto a security or an asset or whatever it is, it's going on long enough. Coinbase has actually been positioning themselves to act as if they're a real stock market maker. So even if the investigation comes back to say, okay, cryptos are securities like stocks, I really don't expect anything massive to happen there. It's that insider trading angle that was going to cause a lot of drama that you should watch out for. All right, let's see. How many minutes until market open? Oh, is it right now? No, 2 minutes. We got minute 50. All right, minute 50. Here we go. Here we go. Let me check my comments. You guys have any comments at the moment? Let's see here. Time to buy silver and gold. Carolyn, it's always a good time to buy silver and gold. Sean says, update on AMC for us apes. Yes, we will talk about that briefly in a moment. We got about a minute 50 until the market opens, so I won't be able to do any amount of quality coverage on AMC or GameStop. We'll do that right after this, though, okay? Okay, here's one more thing for you guys. Now, this is China related. If you guys haven't been paying attention to China, no wonder. Did you guys see all the bank runs happening in China over the last month? It got so bad that about a week ago, the Chinese military rolled out all those tanks and all of that to stop people. But again, I don't trust anything that comes out of China, to be quite honest with you. So don't trust anything you see out of China. You remember when you saw videos of people falling over in the street and hospitals shoulder to shoulder with people screaming and apartments being welded shut because of the fake virus? Well, anyhow, this news article, China's property sales are set to plunge 30%, worse than 2008. But now, while this is all true, and for those of you who've been following the Evergrande real estate drama, you guys, Evergrande should have, collapsed, imploded on itself like 10 times already. But it's just another little data point to keep in the back of your head. And lastly, Pfizer. Well, Pfizer would never do anything unethical or immoral. They are the bastion of, the American way right now, and I love them so much. And this broadcast is sponsored by Pfizer, actually. It turns out they just got fined $75 million, which is truly pennies to them, for overcharging health services for epilepsy drugs. So, who's surprised? But hey, let's check this out. Okay, let's hit the sound effect here. We got the market up.
There's an infinite amount of cash at the Federal Reserve.
Here we go, green flag. So hot in here. Biggity. So hot in. Let's go race boys. Oh.
All right, let's see how the stock market's panning out right now. Like all the futures showed, things are pretty up right now. Let's just hear him talk.
Google pulling back after the big gains recently. Okay, I want to start with Meta, take a thorough look at it. That stock is down 50% this year.
Yep.
Wow.
And it's down another 5% right now. This is a big deal. They reported their first ever quarterly sales drop. It is very hard to sugarcoat this report card. Their ad revenue, their growth engine, their moneymaker, it was down. Their ad prices fell. That's good for marketers. They fell 14%. And then you look at the Reality Labs division, which houses Meta, which is Meta. It lost $2.8 billion. So, then you have the CEO. Mark Zuckerberg normally starts the call saying, we had another good quarter. That was another great quarter. He didn't do that this time. He said, we're reducing headcount, and we're going to do
Shout
so
out to John
steadily
Toms
over
on
the next
YouTube. He
year.
says
We're
video's not loading. I don't know what to tell you, man.
Okay, so you got
Everybody else seems to be
160,
having an
that's
okay
the price
time. I
of Meta
apologize.
stock as we speak, and that's a rotten-looking chart, straight down, left to right, straight down.
Go back to CNBC, so I be patient with me, y'all. There we go.
He was on Squawk Box this morning, and really good story. And unless, there it is, up 6.
Yep.
Unless you're in Hershey, what the heck is Hershey doing? Have you ever met the woman who runs Hershey, Michelle Buck?
She's been on.
She's dynamite.
180 beats by 12. Raise the guide. 15% div hike.
Willy Wonka, man.
Yep. Definitely good news out of Hershey. But Darius on Honeywell, they do trim the high end of the range.
But
aviation is clearly
their aerospace and their oil and gas. He's built a great portfolio.
I've got all these damn cords in the way. I don't know. Look at this. I don't know what it is about Hershey, but Hershey is killing it this year. At a time when everybody is down, this year Hershey is up 14% this year. Compare that to just the stock market as a whole. That is incredible. Yeah, Hershey is killing it this year. There's really only 2 companies that are killing it this year. There's a few, but really it's Coca-Cola and Hershey. Don't ask me why. Don't have time for it at the moment, but.
You were hopeful that Jay Powell is not a dreamer when he said that things are going to pretty much cool off. You then merge that with what what Brian was saying yesterday. Brian went in from Bank of America, which is a large bank. And you say, look, there's not going to be huge layoffs. And there is going to be a lot of materials that you'll be able to buy at lower prices, that maybe the price hikes for all goods that we've seen endlessly are over. We've not been able to see yet whether job hopping is over, which is how jobs go higher. It's going, no, here's something that no one wants to say. It's going Jay Powell's way. See that? That doesn't elect, I'm not trying to get anybody elected here. Right. It's going Jay Powell's way. He can now go away. I mean, when you listen to the medical, I'm serious. The layoffs are not where you thought, because we're so used to those companies being secular growers, and suddenly there's Mark Zuckerberg saying, you know, it turned out we're in a big cyclical business and it's not good and it's getting worse. Yep. So, I mean, he's got thousands of people that if I worked at Meta right now, today, you know, it would be kind of like, hey, you got anything for me? I mean, I don't know.
You'd be polishing your CV?
I'm willing to take a nice pay cut.
Look, I don't like Jim Cramer very much. I think he's kind of a fraud, but he is.
Amazon, two of the largest and most successful companies in the world. They will report this afternoon. Can you give us any kind of preview?
Let's start with Apple,
right,
and I'm going to go through some of the numbers because they're
and last
huge
week's
numbers.
episode dedicated
Profits
to earnings.
should
This
fall
is the big,
11%
some of the big ones right here.
at Apple.
and
Revenue
Amazon
to grow a
reporting.
modest 2%
Now, if you missed it
to an
also, Microsoft did report
$82.8 billion
earnings the other day.
quarter. That's how big Apple is. That much money in one quarter. Their iPhone, that's where they make a lot of their money. Those sales are going to fall for the first time since 5G was introduced back in 2020. The iPhone's like 45% of their revenue.
So about 3:34
and then you
o'clock,
have
you'll
China
hear that.
shut down.
Microsoft
So
reported
maybe they
theirs,
set the bar low,
and
they've
they had a
warned enough,
slight
and
earnings
investors will be
miss.
impressed by something that
However,
they
it's
said.
not
They're not
surprising.
in terrible
They did
shape.
warn
This is
everybody
Apple,
of that in
but
their previous
it's
two
it
quarters.
weighs so much
back
on the
in
overall
what,
market.
like April
It's all
and
baked in,
January
isn't it?
time.
It could be.
All of those
Even
things
so,
are
though, it
baked
doesn't make
into
it any
Apple at 156.
easier.
So the slightest
really
encouragement would put them
Excuse me.
up.
I really
The
like
slightest
Microsoft,
discouragement would take them down. How about Amazon?
Profits to fall 82%. Can you imagine?
Ouch.
Revenue to rise 5% to $119 billion in just 3 months' time. Cloud, that should be reliable. Online sales are likely going to suffer. They've warned us. We've got too many warehouses. We have too much stuff, which means there could be a second Prime Day this fall in October.
Now, we also have news on the airlines. Specifically, JetBlue is going to take control of Spirit. Now, can you tell me, what are you laughing at?
Because it's your favorite story.
Well, no, I like this story now because we've got a conclusion.
Since April,
it's not
finally.
Just stupid incremental moves backwards and forth. No, we got a deal. They're going to take Spirit. So what kind of airline are they going to create?
The fifth largest in the U.S. And I'm going to say discount carrier in quotes. Maybe a cheaper alternative to the major carriers like United and American. I hope JetBlue upgrades Spirit airplanes. It's a $3.8 billion bill.
Why, you flown on Spirit and you don't like them?
I don't like Spirit, sorry. It's been a while. It was like a...
I don't think anybody likes flying Spirit.
Starting to ship a lot of subscriptions, which we never did before. We have a really bright future, but we have to deliver profitability on our EVs.
I thought he was sensational.
Oh, man, you guys. Okay, here's the frustrating thing. Jim Cramer, CNBC, kind of annoying, but they've got some killer interviews sometimes. Last week, if you remember, we just by a couple of minutes missed the interview with the Goldman Sachs CEO. But damn it, this morning we barely missed Facebook.
Who is the...
There's last night was the Ford CEO.
Wildest analyst on the street. Adam Jonas. Here's what he goes. He starts by saying, the Raptor is badass. Okay. And then, do you have too many people? And the answer, surprisingly, was another candid answer, like not unlike Mark Zuckerberg. He said, yeah, we do. We have them in the wrong places, but we're going to make the changes. And, you know, he's a race car driver. And he likes to win. And if he doesn't win, like number 2 is first loser is what he calls them.
Yep.
And he's not going to be first loser. I liked the call. I like the call.
Now, Jonas has been consistently wary of delinquencies.
Yeah,
he looked at Ally.
He's got to come around.
Would you go with that school, or what Brian's saying about the consumer?
Brian Moynihan would tell you that Ally is probably, you know, I don't put words in his mouth. It's not that great a lender. They lend to people who aren't that good. Mary Barr told me the other day.
Okay, honestly, I don't know much at all about the auto industry. That's not that interesting to me. Of all the various industries that I would like, that I like to watch, that is not one of them. So let me pull back then. All right, so a couple other things, and then I'm going to kind of wind this down. You guys, again, feel free to comment in the comment section. I'll read them out loud, and we'll go through them and just kind of hash things out. It looks like Sean says, NASDAQ on track for best month since October. Are we fully priced in for a recession? Well, let's check out the NASDAQ. I don't think so. You know, people say priced in, priced in, priced in. Here's kind of the thing about priced in, you guys. When you're going out to buy a house, is it priced in? No, you just like, you can't control the federal funds rate. You can't control interest rates. So just like gas, is anything priced in for gas when you go to the gas station? No, I don't really even pay attention to the gas station prices because I have to have them. Your credit cards that are being affected by federal funds and all of that, business loans, home loans, car loans. You can't really, if you need a new car, you need a new car. You don't have a choice. So I don't like that phrase, priced in. I don't think most things are priced in. Yeah, the stock market's up, you know, like Sean said. Year to date, the NASDAQ, which is just primarily, it's actually mostly all the tech companies, but this is what Sean was commenting about right there. Up just about 8% in the last 30 days. Is the recession priced in? Sean, I don't think so. It just became nearly 1% more expensive to do anything. I think that starting today, as the interest rates are now 0.75% higher, it's just going to affect people more and more. I mean, me, for example, I'm trying to refinance one business loan, and I'm sitting here thinking, damn, this is going to be, you know, I'm doing the math, right? Figuring out how much more expensive it's going to be with that interest rate rise. Was that priced in? Not exactly. Not really. I don't have a choice, but like I said earlier, there was that tweet from, I think it was a CNN yesterday, that said in very clear terms, the purpose of this is to slow consumer spending and demand for credit cards, home loans, auto loans, business loans, stop credit. And when that kind of stuff happens, we go back to Facebook, who reports, oh, that's not Facebook, what the hell? Oh, why is it doing this? You guys, darn it. Facebook, why is it not even showing me Meta? I guess I have to type in Meta now. There we go. So when rates get increased and the cost of doing business becomes more expensive, you get something like Facebook, where people stop spending as much money on ads. You get same with, although, well, I won't start trying to track down various stocks, but you get the idea. So I don't think it's priced in. I don't like that phrase, priced in. I don't think it's very a fair type of phrase, but thanks for the comment, Sean. I know exactly what you mean by that, though, when you ask. Over on YouTube, Vashbach Gaming, is that how you pronounce that? Vashbach Gaming says, our stocks is based. Yes, Vash, I don't like getting my news from Wall Street Journal or any of those. It's primarily citizen journalists on Twitter, and also, yeah, a little bit of Reddit. You can find some really good conversation on there. So, you guys, I'm going to wind this down with a few tweets I wanted to go over with you, and some of that AMC GameStop update that some people were asking about. So, first off, it is official. Well, I mean, it's official to most of us who just want the truth. It's not official to anyone in the White House yet. America is in a official recession as of today. Peter Schiff, he tweets here, Q2 GDP fell 0.9%. Despite the Democrat Orwellian spin, the U.S. economy has been in recession all year. With yesterday's rate hike, more layoffs, and inflation continuing to erode purchasing power, the recession will deepen in Q3. In fact, Q2 GDP will likely be revised even lower. And that's happened quite a few times where these numbers, they report them, and then everybody forgets, and then like a week later they revise them to be worse than what they're even reported. But I want to touch on one thing he mentions there. More layoffs. You guys, there was this killer graphic going around with the number of Fortune 500 companies that are laying off people. It's shocking how many people are being laid off or just hiring freezes. And then, yes, inflation and purchasing power eroding. My friends, this is very simple. I'll skip that since we went over that a minute ago. This right here, this chart here shows the amount of US dollars in circulation. Okay, this goes back, can I make this any bigger? No. Okay, it's about as big as it gets. Unless there is, yes, here, this. Okay, great. All right, my friends. Purchasing power, inflation. Why is it that food keeps getting more expensive? My friends, this is the number of US dollars currently in circulation. This on the left, you can't even see it. It's so low. This is 1959 when we started tracking this, I guess. Let's go back to the last 10 years. Let's zoom this. Okay, let's just zoom this to year 2000. All right, so there's George Bush there on the left. Now we're going to zoom this up to Obama. All right, so right here, this is Obama. Okay, starting with Obama. Now you can see it's really starting to increase. All right, let's bring this into Trump. You guys, I like Trump, but he had a lot of faults. One of them was he did not stop printing money. He just kept printing and spending. All right, however, with all that said, right here on the right, anybody with half a brain, no matter how bad your eyes are, you can see that the degree of spending just continues. You might say, oh, it's COVID. Yeah, well, COVID's over, you guys. COVID was over 3 years ago. This right here, let me zoom in just to Joseph Biden. Right here. This is Joe Biden. This is the amount of money printed in Joe Biden. This is his Build Back Better. This is the infrastructure. This is all that money to Ukraine to support a fake war where people are actually just laundering money around the world. This is Joe Biden's use of money. This is unbelievable. Now, again, I zoom out the last, let's say, last 25 years for context of how much is being printed. That amount of money makes this happen. This next chart, this is the Consumer Price Index. Imagine your shopping cart of tires and steak and paper towels and a gallon of gasoline and rent and all the stuff you and me, average Joes, spend our money on. Let's just zoom into the last 10 years. This is the last 10 years. This is inflation. This is, you don't want to see this over here on the right. You don't want to see this. This means things are getting more and more expensive. Again, here's Obama. Here's Trump. Okay, still inflation is happening. Here is Biden. This is directly a result of their decision making. There are multiple ways and decisions on everything that happens on how you react. Their decisions have directly affected inflation in a negative way. You can see just how bad it's getting. And so that, to come back to this tweet, that's where Peter Schiff says, we're likely to see inflation continue to erode. Remember, I showed you this chart at the very beginning of the stream. The Federal Reserve keeps saying, and they said again yesterday, look, you guys, we have $9 trillion of stocks and bonds and real estate that we own. We can't do this. We're going to start unwinding. Well, my friends, this is just the last 12 months of them trying to unwind. They went from, in fact, I looked at it yesterday and I audibly went, oh my God. I thought it was going to be so much bigger. At their peak, they were at $8.96 trillion of assets. Today, they're currently at 8.89. Wait a second. 8.89, 8.96. They've gotten rid of like nothing. A couple billion. And honestly, that's like a rounding error for the Fed. They've gotten rid of this much in assets. This much. And the stock market is barely holding, not the stock market, the entire U.S. economy, really. So, anyway, let me get through a couple of tweets so I can get on to the AMC GameStop stuff you all were talking about. Scott just says they're going to spend $500 billion more in this inflationary period and raise taxes on corporations. More fuel on the fire. Scott, man, that is spot on. That is exactly what their strategy is. And you're right. That's exactly what's going to happen. But, Scott, you and me and everyone watching this knows that's the only strategy they have. Because the system right now in Washington, D.C., the system at the U.S. Treasury and the Federal Reserve, it's such an immoral, unethical, and corrupt strategy and way of operating that this is actually the only thing they can continue to do, because any other decision or behavior with regards to spending or money supply or economic theory or any of that, Any other idea would be more ethical and more moral than what we're doing right now. But to keep the game going, to keep the music playing, this has to continue happening. All right, just a couple of headlines I wanted you guys to see that I thought were relevant that I don't see anyone really talking about. This is from last week. The number of Americans filing first-time unemployment claims soared to an 8-month high last week. I don't think I also liked the follow-up that came out a couple days ago that said the number of Americans who are willingly not looking for work is also spiking, and it's primarily all people in the baby boomer and above age range. So, you know, whatever. Tesla. No. Gosh, there were some things I wanted to see. BlackRock, this was an interesting little one. BlackRock just chalked up the record amount for the largest amount of money lost by a single firm, by any firm ever, over a 6-month period. In the first half of this year, BlackRock lost $1.7 trillion of client money. I don't even know what they're doing. Is that just purely just because the stock market is going down? I'm not sure. Honestly, I'm not sure. But this is also BlackRock that is buying up entire neighborhoods. Now, a quick note on that. BlackRock tried to say, no, we're not, and, you know, do a good little PR. But they are. They're just doing it through a subsidiary shell company that's basically buying it all. It's a shell company that is owned and operated by BlackRock. So technically, it's not BlackRock Incorporated, but it is one of the shell company subsidiaries that they own. Yeah, so this was from Microsoft right before their earnings. Microsoft is slowing hiring in some groups, eliminating open jobs. And again, that's what pretty much everyone is saying and confirming this earnings season. I don't know if you guys saw this. People are giving Elon Musk and Tesla a hard time because they reported earlier this week that they have sold something like 70% of their Bitcoin holdings that they had. So anyway, another crypto exchange filing for bankruptcy protection. I'm not going to get too deep into the crypto stuff right now because crypto is just seemingly a gigantic scam at the moment. But like I said, I'm not going to get too deep into that stuff. Okay, let's close this thing out with, let's see what's going on with crypto, AMC and GameStop. So first things first, for those of you watching who know GameStop is not actually down 75% right now. GameStop a few days ago had a 4-for-1 split. So if you had one share at $100, you now have 4 shares at $25. Had some clients calling asking, hey, are we really down 75%? I said, no, you're not down 75%. The same amount you put in on day one is still there. It's just you have 4 times the amount of shares now. This was something that's been known for a couple of months they were going to do. Okay, so let's see here. I'm not sure if there's any major stuff aside from that. There's some strange strange developments on the CEO and GameStop tweeting and interacting a lot with Blockbuster. All right, so not only did the CEO buy a stake in Bed Bath & Beyond, but also Blockbuster, a lot of tweeting back and forth. I don't know what that means. People are speculating as to what that could possibly mean, but who the heck knows. One other very unique update, let me see if I can even find it on here on this GameStop Reddit page, is how many shares have now been taken off of the stock out of the stock market in GameStop. Let me see. I don't want to have you guys just sit there and watch me scroll, but it was up yesterday where roughly 40% of let me just type in GME. I think it's DRS. Is that the website? Yeah, right here. 50%. Let's see if they have it on here. I don't know that they will, and I'm not going to scroll while you guys sit here and watch. But why is that a big deal? Why is it noteworthy? Well, it's noteworthy because 50% of all shares that anyone can buy are no longer on the stock market. which if you're following the GameStop and AMC drama, that is now 50% of all available shares can't be shorted or manipulated in a way that these hedge funds and people typically do. Regarding AMC, though, I don't know too much on the updates of AMC at the moment. I don't follow AMC nearly as closely as I do. However, you know what, just for the hell of it, let me check comments real quick. And then Sam Austin says BlackRock is evil. Yeah, I don't think you're too far off, Sam. That does seem to be the case. Okay, let me pull open AMC's page because you guys were asking about AMC. Honestly, AMC, or at least the GameStop page, that's where you get some amazing insightful economic research and data. Okay, honestly though, I'm not even going to comment on AMC because unfortunately I don't follow it nearly as closely, but it follows almost in tandem with GameStop. You see that? Almost point for point these guys trade. So I suppose me commenting on GameStop ought to give enough insight to AMC. Let me see. Here's enough. Let's see here. U.S. House tweet from Bloomberg. U.S. House Democrats propose ban on stock trading in August. Okay, funny enough, the U.S. Stock Act already did that back under Obama. All they do is have to enforce the law, and we wouldn't need to worry about that. But it looks like there's an update. House Democrats plan to announce a proposal next month to ban lawmakers, their spouses, and senior staff from trading stocks, according to multiple sources close to the issue. Again, we already have that. It's the U.S. Stock Act passed. Oops. U.S. Stock Act. Oh, there you go. Enacted by the 112th U.S. Congress. That was during Obama. Stock Act is an original bill to prohibit members of Congress and employees of Congress from using private information derived from their official position for personal benefit and other purposes. You guys, this is all just a show. Don't believe any of it. You know it's a fraud. They're just trying to trick you into shutting up and stopping the protest. Okay, you guys, that's about all I've got for you right now. I could go on, but I try not to bother you. I try to keep this very to the point and lots of good information. I don't see too much more that I'm going to go over right now. Let's just see here. Final thing, let's see if the heat map is open. All right, so you can kind of see this is what the stock market looks like today. Pretty much green across the board. Healthcare is not doing so well, but pretty much everything else is doing just fine. Biotech, oh god, I just do not like biotech. Down here in the bottom, you see that? Pretty much red across the board of biotech as well. But regardless, you guys, that is about all I've got for you. Any last comments? I'm going to read some comments just to make sure I haven't left anyone out that has some ideas. John Toms on YouTube, I hope things got back together and were working for you. Let me see here. Yeah, that's about it right now. All right, you guys. Hey, I thank you for watching. Make sure to email me or type some comments down below if you want me to follow up with you on the next live stream. Probably do this in a... Gosh, I'm leaving town here for a little family thing soon. Let me see. So I'll probably do another live stream next Monday or Tuesday. All right, next Monday or Tuesday, we'll make it for the stock market opening bell. And that is all I got for you guys right now. Thank you very much for watching, and make sure to share this, and I'll see you guys next time. All right, thanks.